Hi everyone, Arnold Van Dyke here, Director of Tax Services with Tax Audit, and today we'll be discussing IRS Offers and Compromise. So first, what is an IRS Offer and Compromise? An IRS Offer and Compromise is an attempt to settle your tax liability with the IRS for less than what is owed. There are three types of offers in compromise. The first is IRS doubt as to collectability. This option is the most used, and substantial majority of accepted offers is through doubt as to collectability as well. There is IRS doubt as to liability, and there's also IRS offer and compromise based on effective tax administration. Number 2 and 3, doubt as to liability as well as effective tax administration. You are stating to the IRS that you are potentially able to full pay the balance through the IRS collection statute, but because of some other exigent circumstances, the liability should be settled for less than what is owed. Since IRS doubt as to collectability is the most common one, that's what we will be discussing today. So first thing first, before the IRS will accept any submission of an IRS offer and compromise, you have to be in compliance with your tax filing responsibilities, meaning if you have any back tax returns that have not been filed, those will need to be filed before the IRS even will review your offer and compromise. Once your tax returns are filed, the next thing to do is to use the IRS Pre-Qualifier Tool to see if there is a chance that they may accept your offer. If the IRS calculations show that you can full pay the balance, then there's really no point in submitting the offer if it will be rejected. The IRS on their website has a pre-qualifier tool that takes you through a few steps that basically gives you an indication of whether there's at least a chance that the IRS will accept your offer. I always suggest people use that tool to check. The next step is, once you've done the pre-qualifier tool, is to complete the IRS offer and compromise paperwork. This is done by completing the IRS Form 656 OIC and Form 433A OIC or 433B OIC, depending if it's an individual or a business submitting the offer and compromise. The form will ask questions such as any real estate you own and ask for supporting documentation to be included for that, any equity in investments, any bank accounts, and will also ask any income from wages, income from distributions from partnership S corporations, any ownership in C corporations, any equity in vehicles. So basically what the IRS is looking for is a full financial picture of your current situation in order to make a determination. Make sure to complete the IRS offer and compromise in full, as if it's not completed in full, the IRS will either return it as rejected or not even process it. A lot of times the IRS will, if it's not completed in full, the IRS will give you an opportunity to correct some minor errors. Once you complete the offer and compromise, you have to decide whether you want to submit an offer and compromise based on a 20% down payment or a periodic payment offer. The first option allows you to use a monthly disposable income period of 12 months, and the second option gives you the option of using a periodic payment offer, meaning you'll pay as the offer is processed. Monthly payments, and under the first option, you'll make a 20% down payment of the offer amount. Now, once you submit the offer, the IRS could take anywhere from 6 to 9 months to process the paperwork. They generally work IRS offers and compromise on a first in, first out basis. Your case will be assigned to a settlement officer who will then get in contact with you or your power of attorney in order to review the financials, see if there's been any update. Oftentimes, once your case is assigned, they will request updated bank statements, since the bank statements that they have in their possession is from 6 to 9 months ago. Assuming everything checks out and the offer amount is accepted, the settlement officer will then send you an acceptance, and any acceptance of an offer in compromise is conditional based on you being in filing and payment compliance for the next 5 years, meaning you have to file on time, any tax returns on time for the next 5 years, and also pay on time for the next 5 years. Also required to make estimated tax payments for the next 5 years if necessary. If your offer is rejected, you do have appeal rights. You can appeal the offer in compromise within 30 days, and your case will be assigned to the IRS Offer and Appeals. One thing I personally like to do is file an offer in compromise through a collection due process hearing. The reason I like to do this is because if your offer is rejected, even in appeals, you do then have the option to take the case to tax court.
For more information about offer and compromises, or how Tax Audit can help you resolve your tax debt, check out taxaudit.com/OIC.